Good. Hi, this is Andy Hoffman of CryptoGoldCentral.com, the sound money blog of the 21st century, in which I write daily of my vision of the future of money, in which gold plays a passive role and Bitcoin is the center of the universe. Try my free 7-day trial membership and contact me anytime at ahoffman at CryptoGoldCentral.com to arrange cryptocurrency or precious metal consultations or get details on how to safely split Bitcoin forks. In today's one-on-one episode, the 23rd, it's an understatement to say I'm honored to have Simon Dixon with us, given how much knowledge he imparts and how beneficial his efforts have been to the Bitcoin community at large, to the point that unquestionably he is on its Mount Rushmore of luminaries. Not to mention the prescient timing of his appearance, given the massive turmoil the sector is currently amidst. Simon, like myself, is a former banker in the legacy asset realm, who has become one of the cryptocurrency community's most diversified and influential investors. Through his Bank to the Future platform, his companies have invested nearly $200 million in the space and likely will be dramatically increasing this amount in the coming years. Simon, it's a pleasure having you here on One-on-One.
Hey, thanks for having me, Andy. I'm sure we've got lots to cover today.
Oh, we certainly do. Okay, so we're going to get started on what I have no doubt will be one of the most inspirational and motivational interviews you'll ever hear, which for the first time, I literally waited until just a few hours before airing to script, given how rapidly the cryptocurrency markets are changing, to the point that it would not have surprised me if I woke up this morning to see Bitcoin bouncing off Tone Vays's mythical $7,500 target or surging above 12,000. As it stands, this entirely healthy and proportionally typical Bitcoin correction amidst the most fundamentally bullish backdrop I can recall continues to consolidate in the 9,500 to 11,500 range it has been stuck in for most of the past 2 weeks. Simon, let me start by asking the simple question of why did Bitcoin crash? Is it merely, as suggested above, the natural short-term response to a parabolic rise, or something more dangerous and long-term in nature? Also, is your view of the even more dramatic altcoin surge and plunge any different than that of Bitcoin's?
Okay, so a lot there, really. So the first thing is, look, I spent my early career days as a trader. I was a market maker for the London Stock Exchange on AIM-listed stocks. Now, AIM-listed are illiquid versions of FTSE stocks. And you know that you can compare their behavior to many of the altcoins and the liquidity, you know, in the current markets at the moment. So short term, you know, anything can happen. It just is the way that trading works is they're driven by the emotions of fear and greed. And if people are more fearful, then the price goes down. If people are more greedy, then the price goes up. And what we've seen over the last, I'd say, well, last year really, is the emotion of greed based upon, you know, people looking for whatever might be the next version of Bitcoin or the next, you know, thing that's going to change everything in the blockchain world. And so this emotion of greed has essentially been going on for a year, and it creates a self-fulfilling prophecy where that drives the price itself. Now what's happening is after a year of the emotion of greed driving the markets, we're now entering the first realm of a tremendous amount of new people that entered the market that really never looked at the fundamentals and never really understood what they were actually purchasing or what they were doing. Now moving towards the emotion of fear. And that emotion of fear can very normally, and then if you're looking at short-term, you know, technical trends, then you can take some candlestick charts and you can stick some Fibonacci ratios, and the most common correction is at 50% level. And so when you put a Fibonacci on a chart, you see that 50% level becomes an important number, and it either drives some kind of support or resistance from there. Now, the thing with technical analysis is essentially people need to understand what technical analysis is. All it is it's making patterns out of the emotions of fear and greed. And it's the emotions of fear and greed that drive everything. But the emotions of fear and greed are not what drives a market in the long term. In the long term, the markets are driven by fundamental value. And so what we're seeing right now with Bitcoin is Bitcoin has long-term fundamental value. And because it's got its long-term fundamental value in that there's only going to be so many Bitcoins, you know, there's 16.5 million of them mined. There's only going to be 21 million of them. Probably, let's put some, you know, a guess is 6 million of them have been lost, maybe, or 6 million of them are held by hodlers that have just put them in cold storage, and never going to move them, you know, until they need to do something with them. And then you've only got about 3 to 4 million that are actively traded on the markets, which are held with exchanges, which is all the speculative volume. So a massive chunk is held by the hodlers. Then there's a load of them that are just lost, that can never be moved by people that didn't really understand how to protect their private keys, or something happened to them over time. And then you've got these ones that just slosh around at exchanges. Now, people know the value of Bitcoin based upon the value that it trades against these traditional fiat currencies. But it never changed. You know, the fundamental value of of Bitcoin is, you know, it's got its user case as a store of value, and each year it becomes more and more useful when new innovations like Lightning Network come along, or for some people, you know, it eliminates user cases like being able to do small microtransactions based upon its popularity, and so new innovations need to come along. But these are the things that drive markets: long-term fundamental value, short-term the emotions of fear and greed. So what we saw is a rise from a very undervalued Bitcoin at about $1,000 relative to, you know, the potential of what you could do with this innovation. Drive up to 20,000 based upon the emotion of the emotion of greed, at the same time as more and more people understanding what this technology can actually do. Now, the good thing is that when you have an event like this, when things like exchanges start to get hacked and people start to question, you know, some of what's happening at these exchanges, people are either going to do one of two things. The first thing they're going to do is either they just had no understanding of what they were in. They're just trying to get it as close, you know, to fiat, and they never really understood the value of owning your own money, spending your own money, and having a sound monetary policy as a long-term store of value. Or they were just using it as a way of making fiat. All those people will exit the market at the first, fear event, or the emotion of fear. And so that drives a bit of, you know, more of a correction. And that's why we tend to get to these like 50% levels. And we've seen it time and time again in Bitcoin. And so, you know, or they're just going to decide, right, well, I've learned the lesson now. This thing called Bitcoin, I've spent the last year studying it, looking at it, understanding the proposition, understanding what it brings to market, understanding the economics of it, understanding the scarcity, and understanding, you know, the impact it can have on traditional finance and in people's lives. And those people will just be they will be taking the time right now to move their Bitcoins from exchanges to hardware wallets, and utilizing this opportunity to actually really understand and use Bitcoin the way it was designed. Now, with the alts, they were 100% driven by potential, you know, just like Bitcoin in the very early days, when no one really knew what it could do, no one really knew whether it would succeed, and it was just a lot more volatile even than it is today. I mean, that's what you're experiencing in all the altcoin markets, because no one really knows if any of those are actually going to achieve their user case. So, I mean, we've only really had, of all the thousands of tokens and coins, we've only really seen Bitcoin deliver its user case as a store of value, lose its user case as a micropayment mechanism, but still be very useful as a way of you being able to transfer your money, store value in larger quantities and larger sums. And then you've got lots of people that want to take the user case on microtransactions, but no one's successfully achieved that. I have my personal reasons why that's not been achieved yet. And then you've had Ethereum, which has achieved the user case of being, you know, some kind of smart contract platform. And then those smart contract platform, the user case that's got traction is ICOs and financial markets. Other than that, everything else is extremely speculative and trying to achieve and find its place in the market. And you'd probably say Monero has achieved its place as a token where you need real anonymity. Those are probably about as far as it's gone. But we've got thousands and thousands of options. Ripple's doing nothing. Litecoin's kind of really doing nothing, but it's performing its user case of, and all of these are now performing the user case of Litecoin. And that is that they're just test nets for different experiments, that if they achieve what they want to do, then it tends to go over to the developers that know how to really implement it in a long-term sustainable way. Anyway, I kind of gone off topic here at the moment.
Well, put it this way, Simon, just so we can finish this topic.
Yeah.
I've always maintained that that Bitcoin is one of the few freely traded markets I've seen. I'm talking about freely, meaning, yes, there's always games being played. But your thoughts on the whole futures coming in, do you believe that the futures has corrupted the markets, or it's just another variable to be, considered?
In my opinion, whenever markets are moved, everyone looks for a reason of what could actually have caused it. Sometimes there is a reason, but the reality is, again, it goes back to the emotions of fear and greed is what move it. The futures market, in my opinion, although it's very conveniently timed, and we seem to get massive changes with a parabolic increase leading up to the futures market and a 50% correction from the actual market. I just think it's coincidence. I just think we had a ginormous increase in price, and we just had a correction, and that's all it is to me. Now, if you want to find reasons for all of that, you can come up with all the reasons, but the reasons is because it goes up when people are buying and it goes up when people are selling. Point blank.
Well, I think we both agree then that basically we had a huge run up, which is consolidating. There's nothing that we're missing about what's going on in the outside world that we should be scared of. It's just the nature of the market right now, and it's a very thin one at that. So now we're going to broach the taboo topic that few dare to try, despite being doing so with practically every other asset on earth, which is valuation. As in, what factors would a prudent financial analyst utilize to figure what Bitcoin is, quote, worth? To me, the starting point is the eyeball test, as in 175 billion seems awful cheap for an exploding, expanding technology with the realistic opportunity of both usurping gold and becoming an anchor of the global monetary system. At a time when cumulative fiat money printing is unprecedented, global debt exploding, and wealth and social inequality unparalleled in modern times. To that end, Simon, what do you think Bitcoin is, quote, worth at this point in time, and how low can it go in your worst case scenario?
So Bitcoin is worth what people can do with it, is essentially, the user case. If loads and loads of people are using it as a store of value, and more people decide to use it as a store of value, then they've got to scramble to find the Bitcoins from people that are willing to sell. If you add to that user case something like you figure out a way of it being able to do microtransactions again, or you figure out a way, whether that's done through a Lightning network or other schools of thoughts on how to do that, and people are actually using it to make microtransactions, then that actually becomes more useful. If people then start using it as a way to serve the unbanked, and people in the countries that don't actually have access to banking start to find a new way of using it, then it becomes more useful and you add more. If it starts becoming an alternative for the younger generation that are never going to invest in gold, but instead they're more interested in holding Bitcoin as their pension, as their long-term pension or savings or whatever it is, that adds more user cases. So it's just a question. Then something like a new technology comes along, whether that's side chains, whether that's atomic swaps, whether that's Rootstock, whether that's RSK, whatever it might be, then you just keep adding these user cases. So the beauty of, whereas gold is gold, and you're probably not going to find new ways of using gold. There might be some kind of technological innovation that makes gold more useful in the future. I don't know what that is. I can't predict the future. But when you have this unique, scarce asset that also is a payment system, that also is a technology, that also can be used outside of the financial system, then you have, in my opinion, unlimited potential. It's just a question of people in the world finding the way that they want to use Bitcoin. And so to me, tackling the valuation is a constantly moving target, based upon the fact that everyone's going to find different ways of wanting to use these 21 million Bitcoins, and there's never going to be more of them. And so that is all going to be taken out in the price because there's no way of increasing the supply. So, you know, and what we see each year is that what things that people can do with Bitcoin tend to get more and more, and more innovation and more technology comes along as more people enter the ecosystem. Now, when you couple that with the fact that there is ginormous systemic risk in traditional finance, and that's not going away. We have not seen a solution to the financial crisis since the financial crisis. All we've seen is more financial engineering, and the financial engineering will continue and continue and continue. But governments are hell bent, and banks are hell bent on innovating things which increase the systemic risk of that system. So if governments make cash illegal, that makes Bitcoin more useful. If traditional markets become hit, the traditional retail banking gets hit with some systemic risk, that makes Bitcoin more useful. And all of these things are going to happen. And while at the moment we're in everyone talking about how amazing Bitcoin was, and now everyone talking about the opposite and creating that emotion of fear, the actual fundamental value of this thing never changes, and the innovation that happens, it only increases every year.
Right. Well, clearly, and we'll get to this in a second. I have never been at a time where I have nothing that I'm really fearful of, and I'm going to ask you about it in a second. But I wanted to finish this question. Again, it's not really a number per se, because I know where you're going to go with it about people hodling and institutions hodling. But how low can it go? I mean, at what point is the price low enough, now that institutions are in this game, that they're going to acquire pretty much everything out there?
Well, again, the only thing that's determining the price is the exchange rate at the exchanges, and the exchange rate at the exchanges is just a small portion of the market, because many of these are not held at exchanges. So what can happen amongst those people that are financial speculators and leave their coins on exchanges is really anyone's guess. I would, this thing can go down further, but I'd expect some kind of support at that 50% level. That's normal for parabolic increases and decreases to correct around that 50% level. I think we're at that value, but it wouldn't surprise me if it can go lower or higher from here, because short-term speculation on these markets is just very news-driven, and emotion of fear and greed again.
Right, especially when the news is not news, which is what I'm going to get to next, regarding your views on what major FUD events are on your radar screen. As we learned this morning, for instance, the South Korean crypto ban is not only not happening, but likely was never even going to happen in the first place. And as for Tether, again, a big scare yesterday, but it was really just reiterating news that was 2 months old, which may or may not have something to it, but it certainly was nothing new yesterday. And timed perfectly for maximum FUD effect. So tell me, Simon, are South Korea, Tether, or any other issues on your mind? I'm talking about known unknowns and known knowns that could be the next Bitcoin FUD, or right now, are you not really too worried about anything material?
So I mean, we've got three major announcements kind of happening at the same time, which is causing a lot of the fear. So you've got the South Korean announcement, where which I haven't seen.
What said this morning? They said it's not happening. The finance minister said no ban. So,
well, absolutely. I mean, I was in South Korea throughout this whole thing, and the market was absolutely booming. It was rampant with speculation, but I'm kind of okay with speculation, because speculation leads to a market like this where the people either disappear or they stay there forever. And in each speculative wave, kind of go through the cycle of speculating on something, leaving it in exchange, and then the ones that lose money or made a lot of money kind of disappear, get more fiat, and the other half put it on hardware wallets, and you get more adoption and people that never leave the crypto industry. So for me, I'm kind of okay that we had rampant speculation, kind of like we had in China. We had rampant speculation in South Korea, and that needs to be tamed. At some point, those exchanges need to be regulated, just like the Japan model has followed. And then you get the two-tiered model. You get the market that operates outside of the traditional finance exchange for fiat, and the market that operates within that system. And both of them are booming. Both of them are needed. So the South Korea stuff, I mean, these people aren't going away. There was no there was people, you know, they wanted to get control of this market. They wanted to understand this market. It went from nothing to a very huge volume. And that creates a lot of speculation on what governments are actually going to do. But the interesting thing, we've all seen this before. This happened in the US, one of the first markets. You know, there was a lot of speculation on whether they're going to bar it, what they're going to do with it. And then they closed all the early exchanges. Like, and then you had, you know, people like Charlie Shrim that were the early like targets for trying to show the world that you've got to take money laundering seriously and stuff. And they closed Trade Hill, and then they closed BitInstant. We had this in the US, then we had this in China, and, you know, you can have the same thing. And so we've seen all this before. There is no new things here. The next event, like the Tether Bitfinex event, I've got to be quite careful because people probably know that, you know, through Bank to the Future and myself, I'm a personal shareholder, and Bank to the Future's one of the shareholders in the company. So, you know, you can take my opinion as pushing self-interest or whatever you want to take it, once you've got that disclaimer. But it's a very, very, very tricky situation. The interesting thing is this all started because one person, and I do mean one person, Bitfinex, did a tremendously good job of selling his Bitcoins at $1,000, and dedicating a lot of his time towards letting people know why the price of Bitcoin had gone up too much and was being manipulated by Bitfinex. He was out of the market. He's got no Bitcoins. He's been very publicly and open about that. And when Bitcoins go up to 20,000, you know, humans tend to try and find things that they can hold on to, things that justifies their actions. So I'm not saying that this is what happens, but to me, you know, that sounds like a plausible story. Bitfinex are in a very tricky situation. Now, when you're out of the Bitcoin market, you don't care what happens to Bitcoin. You don't care about what's happening right now. In fact, you really like what's happening right now because it justifies what you've done and what your actions are. And so you start to, you know, gain more traction, more followers and everything based upon what you did, and it kind of reinforces your belief and your need and desire to be right. Now, Bitfinex, anyone that's in Bitcoin should appreciate and understand right now, and especially if you've ever tried to move a load of Bitcoins into and out of fiat, that the banking sector has no interest in supporting this industry whatsoever. In fact, they got nothing to gain from it. And, you know, that's why anyone that moves their fiat in large quantities around Bitcoin exchanges, you know, can sometimes get their bank account shut down, because people know that once you enter crypto, you tend not to leave in general if you use it the way it was intended, and you tend to find ways. Now, Bitfinex created, you know, this service called Tether was created as a way to allow people to speculate and trade and move money amongst exchanges without having to enter the fiat realm again. Now, in order to create such a service, someone has to hold the fiat. Now, exchanges, very few exchanges are able to get, you know, banking services in a very, you know, traditional way, normal way, because the banking system just doesn't want to support this industry. They, one, don't want to. You can take two schools of thoughts. One, it's just risk with nothing for them to gain, so they want to get rid of it. Or two, you know, there's a more conspiratorial approach that they need to take this down because of they believe it's threatening to them, and both are true. You know, there's risk, and from the regulatory perspective, and there's also risk from that from competition here. So banks have nothing to gain from that, and that means that many of the exchanges have to innovate ways of either keeping people in the crypto sphere, but still gaining some of the stability and ability to move your money. As you do, and someone has to do that. Now, you know, Bitfinex, the hardest part of being an exchange is building those banking relationships. No bank in the world, especially if they're an offshore bank that wants to clear in USD, is able to publicly say, we would like to support the Bitcoin industry, because even if they did, even if they wanted to do that, even if the bank was extremely forward thinking, and there are some like that, like Fidor Bank in Germany, even if they want to do that, they still need to play within the clearing system. So, you know, you then have, for example, you know, Isle of Man is a classic example. They wanted to create an island just for Bitcoin, just for crypto. The Bank of England put extreme pressure on the government, saying that they're not allowed to do that. And if you do that, then we're going to take away your clearing into the Bank of England and buy GBP from your economy. Then the same happened in Taiwan with Bitfinex. You know, the US, who have the most to lose from Bitcoin succeeding, come along and exercise their influence and saying you cannot clear into the Federal Reserve unless you play by our rules. And they make it, you know, they don't allow you to actually clear USD to USD offshore. They make it all come through the Federal Reserve so that they can exercise their influence overseas and go beyond their jurisdiction, as the US is famous for. So even if they're banking offshore anywhere, any type of banking institution wants to support this industry, they have to be very quiet about it. They have to keep things on the low key, and they have to not create unnecessary attention. The exchanges also have to do things that they wouldn't like to do. You know, it's not a normal thing. So if you do, you know, this puts Bitfinex in an extremely hard situation right now, where they could do the audit, but the audit will reveal the very same things that are in no interest to the community to be able to exchange fiat to Bitcoin, because the end result will be the banks will just say, okay, please find another bank.
Right. So basically, Bitfinex is providing an extremely valuable service to the cryptocurrency community, but they're kind of in a catch-22. They don't want to be transparent because that puts them under the spotlight of regulators. But if they're not transparent, then people like Bitfinex attack them and say you're hiding something. Is that kind of how?
Now that is, but I also, as a shareholder, you know, I obviously want Bitfinex to succeed. I'm very happy with the liquidity that this exchange has provided to the community. But I also don't want to be the guy that, you know, says that this is safe, because I don't know. Nobody actually knows. The only people that actually know are the people that are running this exchange. So, you know, that just creates more uncertainty and a scenario which the media absolutely love and play off, where they can say things, and then if you defend yourself, it goes against your self-interest. And it's just the nature of the market that we're in.
Right.
Because the reason that this is all happening is because Bitcoin is now becoming big enough and threatening enough to actually mean something to these banks and financial institutions. And it's giving a lot of fear to these banks and financial institutions, because many people now in this world, more and more, especially this year, live outside the banking system. And all this is going to do, essentially, the end result is that either countries like Japan come along and say, we'll put regulations for the intersection between fiat and cryptocurrency, and everyone can come and all the jobs can go there. Banking jobs are on the decline. Bitcoin and blockchain jobs are on the rise. The country's going to pick which ones are going to do that. And then you get major, and then you have to then do everything in Japanese yen instead of US dollar or whatever it is. And then at the same time, you know, a lot of people are just sitting outside of the financial system. And that is becoming a big problem for both governments and financial institutions. And so in this intersection, in this changing world, you know, there's going to be more stuff like this. But the reality is this is the expected and desired impact. This is, you know, Bitcoin is reaching a point right now where everybody cares and everybody in the world has heard of it. And the biggest, most powerful financial institutions and governments in the world now have to have a Bitcoin policy. That is a sign of adoption, something that they need to integrate into their policies. And that is extremely bullish, because this matters now enough to the people at the highest level. And that is the desired impact. That's, you know, but that is driving a lot of that emotion of fear, which drives the market, which again, it's just natural cycles and behaviors. But the question is, are you going to be the person that gives your Bitcoin to the people that understand the economics, and you then miss out on the opportunity because you listened to that? That is the question, and that is a decision that people need to make.
Well, these are clearly, what we said, the early stage problems, because now the way you explain it's a lot more obvious to me because I didn't quite understand it. The fact is that we are at the point where it is very difficult still. Some people think it's very easy to invest in cryptocurrency. It's easier than it was, but it's still very hard. And because of the tether system, it's a lot easier than it would have been without it. In fact, there probably would be a lot of cryptos that don't even exist if it were not for that. But again, these are the rules that they operate by. And of course, when you have falling prices, it's no coincidence that all of a sudden they say, oh, well, Bitfinex is probably going to be in trouble because there's falling prices. So that means that whatever is going on is worse. Or so, look, the fact is, people, we don't know whether Tether has a problem or not. I think when I initially wrote about it, my comments were, I really have no idea. And I don't think anyone has any idea. And I think that's what Simon is saying. We should appreciate the situation for what it is and realize that this is how you play the game. And this is why if you have Bitcoin, you can use the exchange to buy it, but you'd be pretty wise not to keep it there. Now, next, an issue that few are considering when following, let alone analyzing cryptocurrency, which is, and you mentioned it before, legacy financial markets like stocks, bonds, currencies, and gold. In my view, Bitcoin's emergence as a new asset class, as well as a potentially paradigm changer for global finance and monetary systems, makes it as uncorrelated as any asset we've ever seen. That said, legacy financial markets are unquestionably a factor to be considered. And right now, with the 4-decade bond bull market in question, the dollar at multi-year lows, and commodities, including gold, at multi-year highs, clearly the status quo is on the cusp of a potential inflectionary point. To that end, Simon, are legacy financial markets having an influence on Bitcoin prices and adoption right now? And do you think they'll become more or less important in the coming months?
There's no doubt that Bitcoin's having a major impact, and in that sense, this is where altcoins and the general market of blockchain as a whole is really having an impact. The losers of blockchain, the ones that the biggest impact I believe is going to have is definitely in financial services. Bitcoin had its impact in traditional money, but now we're seeing many companies that are in the process. And you're seeing it as well with ICOs impacting IPOs now. The way to get your IPO price moving, or the way to get your stock price moving, is to say that you're doing something with blockchain. And we've seen, crazy parabolic increases in share prices as a result of, Kodak coming along and saying they'll do something with blockchain, or, many of these other things. Now that's starting to have its real impact. Now, the impact that really is happening here is traditional finance is now a generational thing. People that hold stocks and bonds are older people, or people that have given their money to older people to manage. That's just a fact. Insurance, you've got different pools of money. You've got pension funds, you've got insurance funds, and then you've got, retail and people that have held assets for their whole life. The younger people have opted out of the financial system. The younger people are not, new companies now, they're just not going to IPO. None of the companies that I know that are becoming unicorns right now are thinking of IPOing in the Bitcoin and blockchain sector. This is just not a part of their reality anymore. They would much rather figure out how to launch a securities token and allow this token to trade interoperably with Bitcoin and ETH and all these other things. This is all happening, and it's not going away. These token markets are having major impacts in traditional finance. Venture capitalist funds are not raising funds the way that they used to do it. They're now reaching out to tokenizing and creating these products that the millennials and the younger generation are actually more willing to go into. So although Bitcoin maximalists very much think of all these alternatives in terms of competing with Bitcoin, which is just not true anymore. There's no competitor for Bitcoin. There is nothing that's going to be a store of value. There is no digital gold. There's only things that are fighting for other user cases that Bitcoin might have achieved on top of being a store of value. That's all we're seeing right now. But then, all sorts of other user cases are emerging now. And all of these traditional financial products, one step at a time, are now looking at every single person in the banking, the brokers, they're all looking at how they can tap into this new market, because the cold hard reality is the young people don't want fiat money unless it's for spending in their local domestic economy. They want cryptocurrency. They would not have invested in anything other than, joining these ICO markets and the speculative frenzy that we just had. And even after these bear markets, one might say, well, if their first experience is that they invested into a pump and dump, they're going to exit the market. Well, they were never going to buy bonds. They were never going to buy stocks. They were never going to buy gold. And these are people that have just opted out of finance, and now they've discovered investing for the first time, and their first investment was in the crypto markets. It just so happened that they got unrealistic expectations of parabolic returns because they entered during a bull market. But now a lot of these traditional financial products are going to be, re-engineered into being based upon blockchain, based upon, and all of these blockchains are interoperable and based upon Bitcoin, and Bitcoin is based upon a sound monetary policy and fixed money supply. So while all of this financial engineering and traditional finance are looking at this sector, everything relates to, and this is why the people that don't want Bitcoin to succeed because they want Ethereum to succeed or Bitcoin Cash to succeed or whatever they want to succeed, need to recognize that everything needs that store of value in digital gold. And this is why I agreed with the roadmap of conservatism by not breaking the thing that underpins everything else. So that if someone wants to create a user case of microtransactions that are extremely cheap and fast, then that relies upon being traded into and out of Bitcoin. And all these other things, the smart contract platforms, Ethereum, whatever, still rely upon being traded into and out of Bitcoin, because you need the sound monetary policy that no one's going to replicate. Everything else is semi-centralized. Everything else is created by people. There's not going to be another group of people called Satoshi Nakamoto that spend 5 years in a very decentralized environment where nobody cares, that attract a development team that start working on this protocol, and it is owned by nobody and no one can control it. And the miners, the business people, the users, and everything is semi-independent, even though there's pockets of centralization. You're not going to get that again. Everything else needs that. Now, traditional finance are going to be building on top of all these different blockchains and protocols. And then people at startups and fintech companies are coming along. And all of this is being built outside of the central banking system. And then people are deciding amongst these exchanges how it operates with the money that's created via the private banks through central banking, that is then exchanging with everything that's being based upon Bitcoin that relies upon other blockchains. And then you have all this being built on top. These two are going to be colliding at the moment and going to be exchanging. And then you're going to have jurisdictions that meet the requirements of allow the safe transition from this world to this world. And everyone needs to decide where they're going to sit. But millennials, the young people, they're clearly on this side. They ain't going to enter this side. And then this side eventually is all going to, die off, essentially.
Right. Just like in the crypto market now, you're saying before, you have to have Tether for a lot of these cryptos in the current regulatory environment to survive. And just like in the future, you're going to have a stable Bitcoin to have a cryptocurrency economy. And that's the direction the world's going.
Well, if I want to be able to very seamlessly and easily move my, if I'm in Bitcoin, I decide that I don't want Bitcoin exposure right now. So I convert that to US dollars, but I don't need to hold it as US dollars. And then I can take it from Bitfinex seamlessly in a second to Kraken, because I believe that there's something, something that I need to be fearful of going on at Bitfinex. And then I can take it to Kraken, and then I can trade it out into a hardware wallet, and then you can move it around to Poloniex and all this stuff. That is a significant improvement for anyone that enters into this market. Now, while the problem is that the fiat has to sit somewhere, and wherever that fiat sits is not really, the crypto's problem. It's that they created an innovation that relies upon traditional finance, being able to seize that money, do whatever they want with that money. Because if you hold your money at a bank, you do not own it, and they spend it for you. And so, this is a fiat problem. It's not a crypto problem. And people are interpreting that as bearish for the crypto markets, which I understand why it might be bearish short term. And I understand why that might cause some kind of panic. But the end result is that it ends up, you can then easily right now, if you're fearful of that, that tether, then exchange it for Bitcoin right now and get that Bitcoin onto a hardware wallet and get the hell out. You don't want to take the other option of, trying to figure out how to get it out of the financial system and get it back to dollars. You want to take that option of owning your own money, spending your own money, and have it based upon a sound monetary policy. Everyone has their choice.
And in the future, what I'm saying is that we have to have Bitcoin will have to be that tether. Unfortunately, it's a decentralized tether that does not require Bitfinex to safeguard it without regulators getting into it. And that's if the entire younger generation, which me, especially as a gold person who is converted because I realize the only gold holders are older people, the younger people have no interest in it. We're going to have something stable to be the tether. And there is, as you say, no competition for Bitcoin whatsoever. And I don't anticipate there will be any ever, to be honest with you. Right. Okay. Well, let's see. I want to get right here. Okay. Finally, the most important question of all, as I ask one of the Bitcoin community's top thought leaders, mere hours after Donald Trump's State of the American Union address, for his view of the state of Bitcoin in terms of its current pace of technological innovation, network efficiency, worldwide adoption, and threats and opportunities. That and his view of what his most likely scenario is regarding the current correction and its aftermath. So Simon, with that introduction, please address the United States of Bitcoin on your views of the present and not so distant future.
Okay. So the things that are really exciting right now, and maybe this is where me and you differ, Andy, slightly, because I know you're heavily against the efforts of Bitcoin Cash and things like that. I originally was, but I've come to terms.
I'm not against Bitcoin Cash's trying to be a part of the cryptocurrency economy. I am against their methods of trying to steal from Bitcoin. That's what makes me angry.
Okay.
So, go on. Yes.
So I am really, originally, when I first came to Bitcoin and started to see that Bitcoin was actually becoming something and started to dedicate, my whole life to this industry, I thought that Bitcoin was going to be everything. I thought that Bitcoin was going to be the store of value. It was going to be the digital cash. It was going to be the medium of exchange. It was going to be everything to everyone. I'm coming to terms with the fact that right now, these other things trying to work on different user cases strengthen Bitcoin. And that's what I've learned throughout. That was my lesson of 2017. I originally thought that everything was kind of like a competition or there would only be one. But what has really come to me that is very, very clear is every single altcoin that many people call scams and stuff like that. There are lots of them. But all of them have either driven people into Bitcoin because it entered them into the crypto sector, or they've tried to attempt to solve a different user case that requires Bitcoin to exist. And so by driving people in and making these different user cases interoperable, it is really, really driven. One of Bitcoin's primary user cases today is the world reserve currency for cryptocurrencies. Now, in the future, I believe that Bitcoin could, and potentially when central banks start to realize that the best way to become bigger than the Federal Reserve is actually to take, when countries realize that they can take a portion of their electricity and dedicate it to Bitcoin mining, now that Samsung and all these big players in Japan are entering the market, as well as the people that were here originally, when they start dedicating some of their electricity to mining Bitcoin, and they realize that the central bank's best bet, just like in Bulgaria, when they seize some Bitcoins, the government seized some Bitcoins from some money launderers and then realized that they were sat on a hard drive that had more value than their national debt, other central banks are going to realize that the best bet, the best opportunity for a country right now is for those smaller central banks to bet on Bitcoin, to buy Bitcoin. is the only way in the future that they're ever going to be able to compete with a Bank of England or a People's Bank of China or a Federal Reserve. So I believe that we're going to see, firstly, Bitcoin at today's value has become the world reserve cryptocurrency for other cryptocurrencies. All the other cryptocurrencies work on whatever they're trying to achieve. Now, through 2018, Bitcoin has reached that scalability issue. You know, for 3 years, we've been debating it. Everybody has enough knowledge now on what to do. We've got other chains that can work on bigger blocks and other things and experiment with what that does. And then we've got the off-chain solutions that are coming through. Now, when we see what can be built both on bigger blocks and off-chain, by the end of 2018, we're going to have a really, really good, real example of how Bitcoin can scale, how blockchains can scale, what other user cases people create, you know, what other things that people create that Bitcoin can learn from. And so 2017 was really that year where it became the world reserve cryptocurrency for other cryptocurrencies.
Particularly when SegWit was activated and it became an immutable blockchain.
Then SegWit was activated, which then led to 2 innovations throughout 2018 that we don't get to talk about, we don't get to debate. We can sit here, the debating's over. You know, if someone wants to debate with me about whether bigger blocks are right or whether Lightning Network is right, I'll just say by the end of 2018, let's see what happens on Lightning Network and what happens to those bigger blocks. And we don't need to debate anymore, just build. If everyone just gets to building, if everyone, you know, we have got a tremendous amount of wealth in our industry now. You know, the people might be bearish of ICOs and call them scams or whatever, but what has it done? It's created a self-financing mechanism for people to scam if they want. That happens. But it also created a self-financing mechanism for someone to come along and say, I've got an idea of how, you know, what blockchain can do here, or what Bitcoin can do here, or whatever new token that is going to always be interchangeable between Bitcoin anyway. And that has created a self-funding mechanism whereby we can have rapid growth, rapid innovation, and no one needs to hang around pitching VCs, asking banks for loans, you know, all that stuff. And that has its problems and its benefits. But all I know is that throughout 2018, we are going to see faster innovation, faster building than any of us can keep up. We'll see what happens with big blocks. We'll see what happens with Lightning. We want to see both. By the end of it, we'll know exactly what scales, what the right solution is. And hey, if anyone wants to change their mind based upon the learnings of another one, you know, I seem to see Core at some point. They've always said, if bigger blocks are the right thing to do, we'll do it, but we need to do it in a responsible way. We just happen to believe that on-chain scaling is a bigger priority than bigger blocks for this reason. So we may see Core come around to saying, okay, well, you know, we've seen what happens with 8 megabyte blocks. We've seen what's happening with Lightning. What do we need to learn from that? What can we learn from that? Let's stop debating. Let's just all learn. Let's all build. And let's build this ecosystem, because we are having the desired impact. We are changing the world here. The traditional financial system doesn't know what to do with this. Governments all around the world do not know what to do with this. This is the impact that we all wanted is happening right now. Today is the most exciting time in financial history to be alive. In 2018, we'll see what is the right way to scale. What is the right way to bring 7 billion people to the financial system? That's what we can do. That's what's going to happen in 2019, 2020. Bitcoin halves. You know, we get all this new value. As the prices increase over time, you get this new value, this new wealth that's being redistributed. You know, a lot of people, all of the wealth that went into ICOs was people that made money in Bitcoin and people that made money in Ethereum, redistributing their wealth to someone else because they're willing to speculate on what might be a stupid idea. But it doesn't really matter because they built significant wealth in this area and they were willing to redistribute some of that. It's an extremely exciting time to be involved in this sector. The crashes, the things that we're experiencing right now, in my experience, tend to lead to more innovation, more technical building, because half of the speculators just disappear. The other half get to building, continue innovating, and continue working on solutions because they want to see this market, you know, this turn around, get back to what it was, you know, and so that's really exciting. In 2019, I believe right now, this year, I believe small central banks, whether they tell you or not, they are buying Bitcoin. They have to buy Bitcoin. Every hedge fund manager in the world has to buy Bitcoin as an uncorrelated asset to traditional finance, even if they think it's going to pump 100% and correct 50%. They have to do that. They will realize that this year. So then you have these new traditional markets entering, and you have central banks entering the market. And eventually, if Bitcoin goes on to achieve what it can achieve, if this crypto market goes on to grow into the $1 trillion market, the $2 trillion market, the $5 trillion market, as more and more enters the market and is interoperable with the world reserve cryptocurrency, it then has a chance of becoming the world reserve cryptocurrency full stop. Because these small central banks, just like Bulgaria proved, just by having some Bitcoin, we have value over our national debt. That's going to happen to a lot of countries. And a lot of countries are going to start mining these things, and they're going to enter the markets. And then you enter that potential of it becoming that world reserve cryptocurrency of the world. That's going to happen 1919. Remember, 2020, Bitcoin halving. Then we enter the new 4-year cycle where it's more and more scarce. People can't get these Bitcoins. There's only, as we said, I mean, in the next 20 years, there's only going to be what? I can't remember the supply. I haven't looked at it for a while, but there will only be 18 or 19 million of them. And then the others just take ages and ages and ages to mine. So it's just an extremely exciting phase. And what last year taught me is that actually we are all on the same team here. The debate is good. The trolling is good. We need to hold each other accountable. We need to hold each other to a higher standard. But I want to see in 2018, I want to see more people working together, more people appreciating that this is one ginormous sector. Bitcoin underpins it all. And I don't think that's about to change. You might have a different opinion on that, but it's extremely bullish for the entire industry and sector. We'll see.
Right. Well, normally I'd have about 5 comments based on what you just said, but I think I'm going to leave it at that. I agree with everything you said. I don't think you could have said it better about the outlook for the industry. I'm going to end it there with Simon Dixon. Seriously, one of the industry's most knowledgeable educators, entrepreneurs. Everyone should be following him at Simon Dix Twit with 2 T's. His website is banktothefuture.com without an A. But before signing off, I do want to empower the audience further with a tweet I just published this morning, which is, there aren't adjectives strong enough for the power and fury of the upcoming Bitcoin rally to new all-time highs. Fundamentals, technicals, and sentiment will align in a perfect storm not seen before in financial market history. To that end, please check out the free 7-day trial membership at cryptogoldcentral.com or contact me about cryptocurrency or precious metal related consultations at ahoffman@cryptogoldcentral.com. Thank you, Simon, and everyone have a great crypto day.
Thank you.